Welcome to this edition of Diligence Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. Today, we're going to be talking about the movement in the Board Confidence Index. And joining me, as usual, is Melanie Nolen, who's the Director of Research for Corporate Board Member and the Chief Executive Group. Welcome back, Melanie.
Hi, nice to be here, TK. Thank you for having me.
I think it only makes sense that we sort of remind our audience of what the Diligent/Corporate Board Member Board Confidence Index is. So if you could take a second and just refresh our audience, that would be great.
Yeah, absolutely. So our index is a monthly flash poll of public company board members. So I say flash poll because it usually fields for approximately 4 to 5 days, and then we publish the results 1 week after that. So it's extremely timely. It's a timely report on boardroom sentiment, really. But the survey itself, it consists of 3 core questions, and we ask the same questions every month so that we can build the index timeline. And that is asking directors to rate current business conditions, then rate their forecasts for business conditions over the next 12 months, and then forecast their own company's profitability, revenue, and CapEx over those 12 months as well. So those are standard. They're always the same questions every month. And then to that, we'll tag on a couple of additional questions. Those vary broad range of issues depending on what's timely at the time of fielding.
And if I'm correct, I also have the opportunity to talk to some board members every month about the results, just to sort of get a sense of what people are feeling.
Correct. So we dive a little deeper into not just the rating itself, but the why behind the rating, and then what additional comments they would have about the economy or business or any of the other questions that we ask in the survey.
So the last time you were on, things were moving along rather nicely. But in the last 2 months, we have certainly seen a dip in the index and significantly trending down. So my question for you is, what are the causes for the dip, and what are directors saying about it?
So yeah, you're right. I mean, the index has been trending down since January, but it was a very slight downtrend through the first quarter. And then April came around and that took a huge decline. So now we are 13% off of the ratings that were given in January, and I think some 22% off of where we were last year. So the optimism is absolutely fading. I mean, as far as the reasons for that, I mean, take your pick at this point. There's just such a growing list of concerns, inflation being the top one, of course. Directors are saying they're just not sure how the Fed's going to manage that. And the supply chain disruptions are continuing, labor shortages, this market volatility, the situation in Ukraine, record high oil prices. I mean, the list just goes on and on. So I mean, the concerns are definitely so varied that I think this is exactly why optimism is fading. It's just no way to wrap your head around all of these issues at once.
So do you get a sense that the causes for the concern has changed, or is it just that these issues have just sort of magnified to where they're bleak?
I think it's just magnified. Almost every one of those concerns that I listed were around more than a year ago. I remember directors mentioning inflation not long after COVID hit, and then the stimulus packages started, and some of them raised their hands saying, "Whoa, what are we doing here? That's gonna create an inflationary environment down the road." So, I mean, it's been a concern for a long time. It's just now it's heightened. It's been heightened for several months, and it's really here. Same thing with supply chain disruptions. I think there was a moment in time when not just board members, CEOs too, because we poll the CEOs the same way every month, and I think both groups were expecting things to be over by now. COVID is probably one of the only concerns that was on the list back then that has just completely disappeared. I think very few in our polls are mentioning it now. That's no longer a concern. but the consequences of COVID are still here, like the labor shortage and the supply chain disruption, as I mentioned, that's still here. So they've always been around, but my feeling based on what directors are telling us is that they expected it to be resolved by now.
Yeah. And when you look at COVID and you look what happened in China and the shutdown there, while maybe our country isn't as concerned about it, COVID certainly has just crippled the supply chain out of China. So no surprise there. So, Melanie, from your experience and what directors are saying to you when you have a chance to talk to them directly, can you give us any insight into sort of looking into your crystal ball and sort of predicting the future a little bit?
Well, I would love to be able to predict the future. I think that's interesting because we usually have a lot of feedback that kind of guides us toward where directors expect the economy to be in the somewhat near term. This is one of those months where director after director, and even CEOs, they're just telling us, look, there's just so much uncertainty. We have no idea what's coming next. And again, that's fueling the lack of optimism. I don't want to say pessimism, because I think that there's still a lot of drive behind that. Some comments are that, you know what, if the government could just play with us, work with us, we could make it out of this situation really, well, not easily, but more easily. So right now, I think there's just too much and they don't know what's coming next. So one thing is for sure, though, that from the polling, CEOs we polled, we have the official results. The majority don't expect us to fall into a full-on recession in the near term. They expect a slowdown, but not a full-on recession. And our director survey for June is fielding now. So the data is coming in as we're talking, and it seems to be a little bit of a divide there. So we're having a similar number of directors projecting a recession, and then the same number projecting just a slowdown. I know there's some overlap there at some point, a little bit of a slowdown, a little bit of a recession that can mean the same things. But it's going to be interesting to see how they compare to CEOs who are still pretty optimistic that we won't hit that bottom. Well,
yeah. Well, the stock market certainly is not helping in this situation either. So it's interesting again to follow this, and I know you follow the CEOs as well, and it's nice to compare between the two. But again, the short-term outlook certainly is less than mixed. I think people are feeling that something's going to happen. Again, not necessarily a full-blown recession, but we certainly are going to see things continue to slow down for a while. So.
Yeah, one thing that's interesting, if I may, just one last thing, that everybody is telling us that the demand is still there. There is still strong demand, strong pipelines. Everything is just working really well on that side. It's the supply in it, the supplies themselves, the labor, like the companies cannot fill that demand. But demand right now, despite inflation, is still very strong, according to both CEOs and board members.
I just sit here sometimes and wonder, where did all those workers go? But anyway, listen, this is great. Where can people get connected with the index and get a chance to see it?
Right. So the results are published every month on boardmember.com and on diligentinstitute.com. They're delivered in near real time. So that's on there. We are also preparing reports. So if anybody wants to receive the report, or if you're a public company board member and you want to participate in the poll, you can simply reach out to us. It's research@chiefexecutivegroup.com, and we'll be happy to send you any data point or report that you need.
Well, Melanie, this is the first time in a long time that I'm going to leave this call with less than optimistic feelings about your reporting, but it's nothing that I didn't know was coming down the pikes. But I wanted to thank you, as usual, for taking the time to join us. This is this is information that is important for companies that are doing planning and trying to make sure that they make the correct strategic steps to, maintain as much value in their company as they can. So I always am thankful that you take the time to join us.
Well, thank you. And thank you for having me, of course.
Yeah. And that will conclude this edition of Diligence Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.